Now let's do net worth starting assets. This is where the data is entered that's going to create the summary page or balance sheet for the farm. Each one of the assets is put into a group and is listed here at the top of the page. You can look at one group all on its own, multiple, or all together. The filter button only appears for the groups that have assets entered. To start, add an asset. Depending on the group and type of assets you add, the remaining fields are going to accommodate that type of asset. For example, a cash account is going to only ask for very little information. But land is going to ask for a lot more. For example, the land location, how many acres default, and how many acres on a year-over-year basis. Something unique that we do is ask for rented land, and we treat it as an asset because we have to tie crop budgets to it. You're still going to see land locations requested and default acres, but you're also going to be asked whether it's cash or crop shared. And this information is going to be used in the crop budgets to determine what the cash rent or crop share is. An asset can be listed, but checked off as a non-farm asset. You'd want to do this for a cabin at the lake. You want to include it in for net worth purposes, but you don't want to include it in for report ratios or return on investment because it's not an active asset of the farm. Assets can have a liability tied to them. This helps track the assets against the loans and make sure that you have them all. Go in and edit payments. You can either do regular principal and interest payments or interest-only payments. When you choose interest-only, it's going to calculate the interest payments for you, depending on your known balance and the interest rate. Put in the size of the payments and the frequency. And the payments will automatically be calculated for you and brought into the asset. The checkbox for all years is going to allow you to see the full history of the asset, starting from when it was purchased and for how much. Here we're going to start when we're going to add it this year. Fair market value. Residual is how much is it going to be worth a year from now. So residual of 100% would mean no depreciation. For typical machinery type of assets, we usually want to use 90% residual. Setting the end date means that you would be selling the asset, and you can choose the month and year of the sale. When you sell an asset, it's going to trigger a cash inflow. When you purchase an asset, it's going to trigger a cash outflow for the amount of the purchase less any liability that you're going to tie to the asset. More detail in scenarios is a way to have an asset treated differently in one scenario for the other. For example, we're going to buy this in 2013 actual, but we're going to ignore it in planning. That's going to help us see what the difference would be whether we buy it or not. Let's hit OK. We're showing here in the buying it in one of the scenarios out of the two. So we're ignoring it in planning and we're buying it in actual. Let's see what happens on the summary page. So we go over to the summary page and we see it's not there. Why not? Well, that's because the summary page is only including the assets that we start the year with. If we wanted to take a look forward into 2014, we would see it here. But in 2013, we don't. Nor do we see it if we go back to 2014 in the plan, because it wasn't brought into the planning in 2013 and we ignored it also for 2014. Let's go back to 2013 actual. Starting assets. When an asset is ignored, you're not going to see it in the list itself as being an included asset, but it is going to be shown at the bottom of the page as ignored.